Hello, welcome guys. Welcome back to day 3. Really excited to be chatting with you guys today. I'm really excited to see who all is going to be joining live. um, this is going to be really good. It's going to be really, really good. All right. So today we're talking about one of my favorite topics, which is how to get paid. When I talk about getting paid, I'm not talking about receiving payment from your clients. I'm talking about paying yourself from your business, because you should be paying yourself from your business. The earlier you start to pay yourself from your business, the earlier you're going to have a profitable business, the more it forces you to make good money decisions, right? So I'm really excited about today. Now, if you are just joining for the first time, if this is the first video you're seeing on this channel, or if this is the first video you're seeing in this series, as you can see from the description and from the topic, this is day 3 of a whole teaching series. And so I just want to share that you're going to get a lot out of this if you go back and watch day 1, where we talked about the 6-figure mindset shifts, like mindset shifts that you have to make, letting go of things that are holding you back, and just how you need to think about your business and how you need to think about your time and how you need to think about the value of your work in order to hit 6 figures. Or for those of you who are already there, who are like, oh, I'm always hovering around 100K, how to push past it, right? Those mindset shifts are huge and super important, because we can teach all this strategy. We can give you things to know, give you simple, I'm going to give you some super, super, super simplified ways to think about your money and how much you're making per project. We can give you all of that. But if your mindset is still not changing, then you're probably not going to follow through, right? You're probably not going to follow through with what you need to do to move forward. So let's start with that. The second thing that we talked about yesterday was the 6-figure CEO schedule. So what it looks like to have a schedule that allows you to build 6 figures in your business, whether you have a day job or you do not. I love to share that I built a 6-figure business before I ever went full-time in my business. And that was what gave me some of the confidence to go full-time without being completely scared and wondering how I was going to pay my bills. I had already for years gotten used to paying myself from my business and giving myself raises. So I already knew, like, hey, if I just continue doing what I'm doing right now, I'm at least going to make this much. I can at least pay myself this much, and that's good enough for me to continue moving, right? So you don't have to wait till you go full time to try to build a 6-figure business. You can definitely do it part time. So that's what we talked about yesterday: the schedule, like how to manage your time, what to do when, and how to prioritize. And for today, we're talking about money. We're getting more into money, right? And this is Wedding Business Profit Simplified. Now, I love this topic because I don't think enough people talk about this. I don't think enough people talk about this, and I don't think enough business owners understand this. The truth of the matter, I touched on this on day 1, but just because you're making 6 figures in your business doesn't mean you're paying yourself 6 figures. There's a difference between a 6-figure salary as a CEO and making 6 figures in your business. Those are 2 different things, right? And that's not terrible. Like I said, for most people, you need about $5,000 a month, somewhere between $4,000 and $5,000 a month to live full time, right? Your personal budget will tell you that. Looking at your personal bank statements will tell you about how much you spend per month and what you require to live. So, the fact that 4,000 to 5,000 a month comes out to what, $48,000 to $60,000 a year. So if you can pull that from what your total revenue, then that's a good amount to be able to go full time, right? However, within that, you're probably like, where's the rest of the money going? How do I know if I have a healthy profit margin? Like, I know I got to pay tax somewhere in there. So like, how do I do this? So let's chat about it. First of all, I want to share that one thing that really changed my life was thinking about the fact that I don't have to spend every dollar in my bank account, right? One thing I want to say, a few years into my business, when I just got tired of like withdrawing money, then depositing money, then withdrawing money, then not having money one month and feeling rich and spending money and being like, oh my gosh, the next month, I realized that it's a good thing to have a healthy amount of money in your business bank account. And the reason that is important, a huge part of the reason that that's important, is because that's what helps you to to make it through the slow seasons. For most of us who are in the wedding and events industry, we have our seasons where we're getting lots of deposits or working on lots of events, and the deposits are coming in. Then we have seasons, which many of us are in now, right? December, January, February, where maybe you don't have as many events to work on. And so things are kind of slowing down. And you're like, oh, wait, I'm not getting as many deposits, right, coming in. Now, if you didn't spend everything in your account and you had some money in there, there's no need to panic, right? Because you're the one managing your money as opposed to letting someone else manage your money. I think a lot of times for us as ex-corporate people or people who are used to having a job, you're used to your job managing your money. So your job is the one who's telling you, okay, I'm going to pay you. Yeah, I'm promising to pay you $80,000 a year, right? But I'm going to manage paying you and dealing it out every month, right? When you become the CEO, you become the job. You have to manage paying yourself a certain amount every month. We're going to talk a little bit more about how to calculate that in a bit. But I think that changing that mindset of, okay, I have this money in the bank, let me just spend it right now, or just kind of guessing, to getting to a point of realizing, okay, it is my responsibility to steward this money and to make it last for the year, right? Not from a place of scarcity, but from a place of information. Like, this is what I have booked, and kind of walking through that. That's one thing you want to think about. And by the way, if you're watching this, I want you to know that if you sign up for the full challenge, I've been telling you guys all week to sign up for the full challenge. Go to the description box, sign up, fill out the link. I'm going to actually be emailing you a spreadsheet that you can use to manage all this, that you can use to auto calculate, how much. Yeah, to kind of auto calculate based off of the revenue that's coming in that you have anticipated from payment plans from your clients, and then estimating your expenses like assistance, hotel stays, whatever other expenses you have for your business, so that you can kind of see, oh, yeah, this is what looks good, right, for me to pay myself. You got to get into that, right? Like, it only gets harder. I'm gonna tell you from experience, it only gets harder as your business grows and as your business becomes more complex, and when you start having team members and all of that, it only gets harder. So building good habits now is what's going to take your business the long haul. Most people with brick and mortar stores, they go through this process of closing the books. So every day they look at how much money came in. Every day they look at, what expenses they've had, and they do that. I think, like, I was reflecting on things I want to change about my business next year. And I'm like, I could do that. Like, I could treat my business as if it's a brick or mortar and quote unquote close the books at the end of my business day every day. It's a lot simpler than waiting once a week or whatever, and turning it into a big task. It'd be very quick to say, okay, I booked 3 new clients today. These are their payment schedules. And I renewed this software today. I paid for this. I paid this assistant, and this is what went out. Like, just kind of like tracking that. For me, transparently, we've done it like maybe twice a month, just kind of like going through that. But I think that's doing it every day it makes it an even smaller task. It makes it like super easy. And I think that's just something that I want to change, right? But I think that getting to the habit of writing things down and understanding what's coming will help you. And also, again, getting out of that mindset of, oh, I have money today and broke tomorrow, and just being okay with money being in your account. The second thing that I adopted a few years ago that I really loved is getting comfortable with having a business savings, like having business savings. Like, that's a thing. A lot of us only think about, like, oh, having enough to pay myself. When you're like level one thinking, you're just thinking about covering your expenses. Level two is like you're thinking about paying yourself. Level three is like, oh, wait, I should have some savings. Like, I should just have some money in case I want to make an investment, or in case I hit a hard time or something like that, right? And then the third level is thinking about profit. I'm sure many of us have heard of this book. It's called Profit First. It's great. I'm going to give you the cliff notes today. You can start with what I'm going to give you today. You don't need to turn this into a project that takes you 3 years to start organizing your finances. But, businesses that grow, businesses that do well, they prioritize making profit, not just covering expenses, not just saying, oh, the owner eats last. No, the owner eats first, because as the owner, you're doing the most work. So for your business to be sustained, you got to make sure that you're paying yourself, right? Now, it shouldn't be an exorbitant amount. It shouldn't be an amount that puts your business out of, out of business. It shouldn't be an amount that doesn't allow you to pay for the support you need. But that mindset is what helps you to sustain. And I think for me, that's a huge part of why I've been able to be a full-time entrepreneur for so long, right? Even through the pandemic, even through, the recession or whatever it is that happened this year. I don't know if it was a full recession, but, downturn and everything, that combined with, a lot of other things, marketing, sales, but just that mindset has been a huge part of what's helped to keep everything afloat. So I think that's something that you definitely want to keep in mind. So let's get to the basics. There are five things. There are five uh, places that your money should go whenever you get a new client, whenever you sign a new project, right? One of them, we all know about it, is taxes. We all know about it, and many people hate it. But one thing about paying taxes that I always tell people is that paying taxes is proof that you made money. If you went a whole year and you didn't pay any tax on your business, you probably didn't make any money, right? And I know that a lot of people glorify not paying taxes, but I have a lot of thoughts about that. One of them definitely is that I know people who've like done a lot of weird tax strategies to like always make it look like their business didn't make any money or like they didn't pay themselves and stuff. And then when they wanted to buy a house, when they wanted to finance a car, when they wanted to do anything, all their returns showed that they didn't have any money. So it was difficult for them to make big purchases, right? At a certain point, you got to get comfortable with the fact that if I'm making money, especially if it's six figures, you're more than likely going to be paying some sort of tax. Now, there are things you can do to reduce your tax liability, especially now it's December. This is a great time to invest in things that you want to do next year. For those of you guys who are coming to Planners Who Profit Live next year, you want to buy your ticket now. Get the tax benefit now, right? Buy it now, even though you're coming next year. If there's a big purchase you wanted to make, right? Like I shared with you guys that we have different ways that you can work with us. Like paying in full instead of paying in installments is a great way to get those tax benefits now to help reduce how much you owe to the IRS and give you more of a chance that you'll get a refund versus owing, right? So those are some things that you can do. There are some good tax strategies, but at the end of the day, you're still going to owe something. So a good rule of thumb, generally speaking, this is just general rule of thumb, is 15% for taxes. The reason I'm throwing my hands up and saying general is because the tax strategy in America is not that straightforward. Like how much you pay in taxes depends on if you're an LLC or an S corp, if you have children or not, if you're married or not, if you have other income or not. Like all these things factor into what you're actually going to owe and where your tax bracket is going to be. And then also if you're paying that, like as an LLC, your business is kind of just an extension of yourself. So anything that, so then everything kind of gets baked into your own personal revenue and tax bracket, where if you're an S corp, it's like your whatever came through payroll, like there are different things, right, that factor into it. However, every business book I've ever read has always said that 15% is a good rule of thumb. It's a good rule of thumb. For some of you, you're gonna pay 15%. For many people, you're gonna pay 15% and get a refund. And that's, okay. For some of you, you may pay 15% and right? But that's a good general rule of thumb to keep in mind. Why does this matter? What this looks like is if you just sign a new client and that client is paying you $5,000, right? $750 of that $5,000 is going to taxes. Or if I was to make that easier, if you just sign a new client and they were paying you $10,000, $1,500 of that should be set aside for taxes, automatic, right? So I talked about simplifying it. That's a way to think about it as you're selling things. The second thing is your operations and your operations. Every business has operations that you got to cover. So your subscriptions, like I'm shameless about the fact that I love Aisle Planner. I'll probably leave a link to sign up with Aisle Planner. We have a great link. You get like, I think 25 or 50% off your first 3 months. It's great. It's one of my favorite tools, but subscriptions that help you run your business. For those of you guys who are photographers, you use your Pic Times or your Smug Mugs or whatever it is you use to store photos, and then your Lightroom subscription, and then you're paying for cameras and paying for equipment, and all those things go into your operations expenses, and paying your assistants. So for those of you who are like me, who are event planners, like every time we do an event, I have at least 2 assistants, right? Now, a bigger the event, more assistants, but that's money that I got to pay, right, out of every project. Same thing with photographers. Most times you have a second shooter, or you may be a lighting assistant. Cake bakers, you may have a delivery person, right? Maybe you bake the cakes and you pay someone else to deliver. Like you got to bake in the cost to pay that person to deliver for you. There are other costs that go into this. And these costs are all assuming, this 20% cost is assuming that your team is doing assistant level work. This isn't like they are the lead planners and all of that. Now, when you start getting into that, the percentages change because they're doing more work and you're paying a higher percentage of your project to them. But if we're talking about day of assistance, we're talking about delivery people, we're talking about that, then yeah, that should fit in the OpEx along with your subscriptions, right? So what that looks like again is that if somebody pays you $5,000, you set $1,000 aside for expenses, right? Even if you don't have direct expenses just to that project, you have annual expenses, your website URL, website hosting, you have annual, you have things that are not directly tied your project, in addition to the things that are tied to your project, like assistance and all that. So someone pays you $5,000, you put $1,000 aside, or someone pays you $10,000, you put $2,000 aside for expenses, right? Now, number 3 is owner's compensation. So owner's compensation is pretty much what it sounds like, which is paying yourself, right? What does the owner pay yourself? All of these percentages that I'm sharing is assuming that your business is making under $250 million a year, so 250,000 or less. Once you start crossing that line, again, like I said, you're probably going to be spending a lot more on team. And so the owner's compensation percentage starts to drop. Sometimes it may drop before you get to 250,000. It may drop closer to like 150, 180 when you start ramping up your team, but it just depends on the structure, right? But owner's compensation, particularly in my opinion, if you're making anything under like 150,000 a year or so, it should be 50%. It should be 50%. In the worst case, maybe 40% if you're making a lot of investments. Let's say you're like, it's a growing year, right? Like, I'll be transparent. Like, our highest level coaching program is in the 5-figure range, right? A lot of people come to us, they'll invest high 5 figures for 1 year, a few people 2 years, and then that sustains them for a decade, right? Of making a significant amount. If you're in that year where you're investing somehow, in that way, maybe it's a little less. So that's something that you can keep in mind. But your owner's compensation, I would say at the least should be 40%, but I would say shooting for 50%. So again, what that means is that someone pays you $5,000, right? A client pays you $5,000. You should set aside 2,500 of that to pay yourself, right? Just set it aside. Just set it aside. I have a bank that I use. I've been with them for a couple years. Love them. One of the best financial decisions I've made in my business was moving to this bank. It's an online bank, which actually does a lot of these allocations for me automatically. So when money hits my account, it automatically splits. It's amazing. It helps to keep things nice and organized without me having to like maintain a certain balance on each reserve. And it's just easy to manage. So that's what I recommend. But again, someone pays you $5,000, you set aside 2,500 for yourself, or you set aside 5,000 for yourself. The next thing is savings. Oh my gosh, believe it or not, like I said earlier, you can have a business savings account. So you can set aside 10%. So again, someone pays you $5,000, set aside $500 as savings. You don't know what you need it for, let's let it stack, right? And the last thing is profit. So true profit is not the same thing as paying yourself. True profit is kind of like if you were treating your business like a corporation that has shareholders. Like, I don't know if anyone out there buys and sells stocks, but the money that you're paying into as a shareholder is the profit, right? And so you want to so you don't have shareholders as a small business owner, but you should still have get in the habit of having that profit, that 5% extra, not extra, but that 5% set aside. And what is generally recommended by profit first methodology is that you cash it out at the end of every quarter. So at the end of every quarter, you give yourself a little bonus or you buy something. For some people, they like to take quarterly trips. So you can spend that money on a quarterly vacation to rejuvenate before you come back to your business, right? And working hard. So what that looks like is somebody pays you $5,000 for a project. You set aside $250 as profit, right? What this also looks like is, let's say you make $100,000 in a year total. By the end of the year, you should have, barring any major issues that force you to move this money around, because we're going to give ourselves grace in case of that. By the end of the year, you should have $5,000 set aside in profit, or that you've dispersed this profit to yourself. You should have $10,000 in your business savings account. You should have paid yourself $50,000, which comes out to about $4,200 a month that you're paying yourself. Then you should have spent about $20,000 between all your subscriptions and tools and any other expenses that you have, like your assistants and stuff like that. and you should have $15,000. I want to say set aside for tax, but we're actually supposed to pay our taxes quarterly. So you should have paid at least some of it during the year. But so you should have either had that set aside or have that, you know that you've been paying that throughout the year. That's super simple, super simple numbers. And these are numbers that are looking ahead. Some of you might be like, I don't have time for this. I'm just going to have an accountant look at this. The problem with accounting for most people is that you're looking backwards. So the accountant's just like, okay, this is what you made, this is where you are. But the numbers I'm giving you can help you to plan ahead and to know where you need to be and what to do with your money so that you don't find yourself in a bind, right? Because in order to pay yourself, you can't wait to after you find out that you didn't make enough money to try to pay yourself. You got to plan ahead. And this is where, having that mindset of a business owner comes in. You're a business owner first, not just an event planner, not just a photographer. And so you got to plan ahead. You got to make sure the money is there. For those of you who either have a job now or have ever had a job, it was your boss's job, not your boss, but your CEO or your CEO's job to make sure that you guys all got paid every month, to make sure that there was enough marketing going on, enough clients coming in, that the payments were coming in on time enough to pay you. Right. And so as the business owner, it's your job to make sure that you're planning ahead to make sure the money is coming in to pay yourself as the most important employee of your company. And then also to pay for your expenses and everything else as well. So I'm hoping this lesson helps you to understand profit simplified, what profit is. It's not the same thing as paying yourself, what this looks like in numbers, right? So that you can kind of estimate as you're receiving payments, as you're setting your pricing, and as you're planning ahead for your money. So you have something to think about. And I hope that this just simplifies it in your mind. Like I said, once again, for those of you guys who sign up for the full challenge, go ahead, faithshala.com/reset. Fill out the form. I will send you a sheet that you can use to organize your finances. It's free, all right, and to track this all and to make sure that your books are clean and that you can look ahead and see like, okay, yeah, I'm at a place now where I can pay myself $2,000 a month, or I'm at a place where I can pay myself $8,000 a month, or I'm at a place where I can pay myself $500 a month, right? And I want to make sure that in 6 months I can start to pay myself $1,000 a month. Like you can look at it and say, okay, this is what I'm going to need to do in order to get to a place where I can pay myself where I really want to go. So you can actually plan and look at the numbers and move forward. People who look at the numbers, people who are not afraid of their money, make more of it and they make better choices. People who run away from it and are afraid have a hard time, right? So I'm hoping that this gives you the basics for you to move forward. Like I always say, like I'm giving you structures, I'm giving you the basics, but if you really want to dive deep together, this might be a great time for us to work together for let me be your coach. You have options from a one-time strategy session just to think through some things, or to work with me for a 6 to 12 month period. All right. So DM me, email me, and I'll send you options. And of course, more information will be linked in the description as well for you to consider. All right. So I'm really excited. I hope you're enjoying this. For those of you guys who are tuning in, I forgot to tell you guys to chat in the live stream. But do me a favor and leave a comment with what your takeaway was. Leave a comment. If you thought this was good, if it was helpful, leave that comment. If you're excited about growing your business, leave that as a comment. If you have a question for me, leave that as a comment, because we reply to all the comments on this page. And I'm really excited, even for those of you guys who are watching the replay, the comments, I'll see you in the comments, and I'm really excited to have you guys here. All right. So I hope you guys have been getting a lot from these really brief 20 to 30-minute lessons. I always tell people not to toot my own horn, but I could do a lot of damage. Give me an hour of your time and we could do a lot together. All right. So I'm hoping that these 20 minutes is helping you to see that. For those of you guys who will be working with on a longer term, can't wait to do that. And for everybody, can't wait to see you guys again tomorrow for part 4. We're going to talk about 6-figure sales that are not salesy, right? You don't have to be sleazy or weird or out of integrity to sell. None of those things are required. So we're going to talk a lot more about that and making sure that you're selling high-end and luxury packages from a place that makes you feel good, right? And so it doesn't feel sleazy or weird. All right. So I can't wait to catch you guys tomorrow, and cheers.